As the death toll rises from yesterday's Christchurch earthquake, the financial cost is again being borne by an insurance industry that in recent times has lurched from one disaster to another. The hit to the sector has been highlighted in the half-year results of Queensland-based Suncorp, which saw profit fall nearly 40%. Andrew Robertson reports.
The insurance industry is not for the faint-hearted, and the second earthquake which devastated Christchurch will put that to the test.
The last 6 months has been really horrible. It's been horrible from a customer perspective, from a staff perspective, and from a shareholder perspective.
It's a half year which has confronted the insurance industry with 2 Christchurch earthquakes, flooding in 3 Australian states, and Cyclone Yasi.
We are currently handling, before New Zealand yesterday, 100,000 natural hazard claims.
Attention is now turning to how much the latest earthquake will cost the insurance industry. Australia's biggest insurer, QBE, at this stage is refusing to comment. Suncorp says its maximum exposure will be $45 million, which will be the cost of reinsurance to spread the risk to other insurers around the world. IAG is facing a $40 million reinsurance bill. However, it may cost Australian insurers nothing. If yesterday's tragedy is deemed an aftershock from the September quake and not an isolated event, all insurance claims will be covered by the arrangements put in place in September. Patrick Snowball is expecting an emotive and complicated debate with his reinsurers on that issue.
If it becomes 2 events, who's actually going to be able to prove when the building fell down after the second event, whether that was caused by the first event, or after the first event the building was sound and it fell over the second?
And while events of the last few months have been huge by Australian and New Zealand standards, insurance analyst Peter Van says for the global reinsurance market, they're not.
Australia and New Zealand collectively are a fairly small market for the global reinsurance markets. The biggest markets where catastrophes occur are wind in Europe, wind and earthquakes in the States and Japan, for example.
The earthquake in Christchurch provided some perspective for Suncorp's first-half profit, which was down 40% thanks to the costs associated with recent natural disasters and the write-down of underperforming businesses.
The underlying margin they get on their insurance business is healthily going up, which shows the benefit of the prominent integration, for example. And in the banking sector, their core banking book is getting a net interest margin which is going up, probably at a better underlying rate than most of the major banks.
However, Suncorp shareholder Kieran Kelly wasn't as charitable.
If you look at the underlying businesses, the bread and butter businesses, they haven't made money through a boom, and they're not making much money now, and I'm very disappointed.
Kieran Kelly believes Suncorp is a company with a history of poor management, which in his view needs to merge with the Bank of Queensland or one of the Big Four.
As a standalone entity, I don't think they're big enough to really compete with the majors on their own. I think they're undercapitalised for the types of risks they're taking, particularly in insurance.
Investors were more bullish, though, marking Suncorp shares up 0.25% when nearly all other financial sector stocks fell.